Good morning, everyone. This is Doug with Right Way Options and your morning market preparation video for June 28th, 2017. Well, yesterday was pretty darn ugly, wasn't it? Yesterday afternoon, the Bears decided to get busy after a bit of an attempt to rally intraday. But the Bears decided to get busy and we started breaking some support levels and actually were selling into the close. So, a couple things about that. First, when we look at the overall charts, we see that we broke support levels here in the diamonds. The spiders really broke a support level, coming down here and testing this overall uptrend in the SPY. We have the NASDAQ creating a lower high and coming very close to testing this low. And you can see this morning it looks like, even though the Dow is expecting a gap up, a slight gap up, the Qs are going to continue lower first thing this morning to test this support level. It'll be important that that support level holds. Notice again that we're having increasing volume in the selling here. Not a good sign. IWM also really kind of gave it up yesterday right here at price resistance and the downtrend. We failed with an evening star type pattern. Now this is trying to move higher this morning, recover some of that, because we're seeing a little bullishness in the futures this morning. Now, if we look back at the SPY, you can see the SPY is actually trying to pop up a little bit, as well as the diamonds. So we're getting a little bit of a reactionary bounce. At least at the moment, we're showing that in the futures. But it's not big. And remember, we do have some economic data coming out that could affect that still yet today. It could be positive or negative. So on the economic calendar, we have the international trade goods at 8:30 Eastern, pending home sales index at 10 o'clock Eastern, and the petroleum status report at 10:30, which will likely be the most important number today because we've been focused pretty heavily on that supply number. If we end up getting some kind of a bigger than expected supply drawdown, we could see that improve the market. If we get a surprise upside in supplies building, we could see that negatively affect the overall market as oil prices and oil companies would continue to sink. We need to start seeing some stabilization there if we want this market to hold up. So overall, we're kind of in a, well, you got to look at this as the Bears had control. Now, the other thing that we have to consider is we're coming close to the end of the quarter. And, you know, as we approach the end of the quarter, there is the possibility that big institutions will start to begin their window dressing activities. And what I mean by that is institutions will typically pump up returns or pump up the market a little bit toward the end of a quarter. They want those finishing numbers to be as strong as possible. If they can get those numbers to lift, to pump up and be nice and solid, then what happens, they can put out reports for their end of quarter that things were better than they might actually have been. So watch for the potential. Now, I'm not suggesting it will occur. I'm just suggesting the potential is there. Watch for the potential of a window dressing bounce that could come in at any time. And it may not play out today or tomorrow. It may be Friday. You never know how one of these will play out or if they will even show up at all. But the potential is there, so I'm bringing it up as something to watch for. Now, with the diamonds, any rally back, and this is what we have to start watching for, a rally back And a failure in here would be really bad. It's usually not that first move down that's important. It's a failure to get back up there that is important. So we'll have to watch that closely. And you can see that what I'm talking about directly here in the SPY. This rally back on lower than normal volume, this divergence that we had here. Look at the volume as we rallied. This divergence created a pretty substantial failure, and that failure, see how quickly it moves. So what I usually mean is this move is not the one to really worry about. It's a failure here, because this failure here has the potential of making new lows. And if we start dropping and crushing through new support levels, and there's support levels through here, we start breaking through those support levels, then we really start looking for trouble. Now, if we look at a 50-day moving average here, you can see yesterday the Qs broke through that 50-day moving average. That is another reason, or another potential bright light here in the Qs chart, is that breaking through there and then coming down here to test this level this morning, we could kind of get the influence of a bounce here. So watch for that in the overall picture. If we look at the diamonds, you can see the diamonds is well away from the 50, much stronger than the other indexes, and a bounce anywhere in here is certainly possible, and a hold in this area. It wouldn't be out of the question at all to see the diamonds come down and test the top of this little consolidation before we catch that bounce. But anytime we could watch, and because of the end of the quarter, that adds to that. Now again, IWM showing bearishness here in the overall candle pattern. Notice that the 50-day moving average is very close to this next level of support. It would not surprise me at all to see this move down here. But because we're at the end of the quarter, it would also not surprise me. And as choppy as this market has been, would not be a surprise to see this rally back up and test this again. So be really careful. Don't have any predefined decisions as which way the market's going to go. Watch it, because that price action is going to be really important. And we've seen that here over the last couple weeks, just really whippy price action. I don't expect that to change today. Okay, so be cautious and be careful and watch those positions closely, okay? We don't want to let good positions turn negative. We don't want to have a bias to the downside and end up catching the whip back up, costing us a bunch of money. Okay, so everyone be cautious, be careful, watch closely this market. I'm going to probably stand out mostly the first 30 minutes or so of the market, waiting to see what happens. Now my SPY hedge position is in a nice profit this morning, and I've only got 20 some days left on these options. There's a very good chance I will take that profit this morning, and then make a decision if I need to add it back or whatever with a little bit longer dated options. I don't want theta to start cutting into this or causing me problems. So right now, I'm probably going to take some of those profits off. Okay, everyone, have a great day. Right Way Options members, we will be at normal time today. And by the way, if this is the first time you've seen these videos, please do me a favor, click that subscribe button on YouTube, and also click that follow button on Facebook so you can be notified when I turn these things out. And I turn out data every single day that the market is open. So every day there's a video that comes out. So take advantage of it if you find this important. Now, I have people ask me, why do I put this out for everybody? This is part of my morning preparation, and I do this just as a courtesy to everyone to help them prepare for their day, to think about all the different aspects and be ready for trading. So please feel free to take advantage of that. Everyone take care, and I will talk to you all soon.